All right, traders, good afternoon. This is Christian from Hertz Tribeca Trade Group, and it is Thursday, March 25th. And another very interesting day that we had on our hands today. Theme of the day I have in there, uh, you know, we started the day red, which I think was just a much better setup for the day, and we got a green close. So I'll talk through that. Risk disclaimer first thing here, everything that we're going through is for information purposes only, not giving out any advice, recommendations, anything like that. This video is for education purposes only. So yeah, let's kind of start with that, and we'll look at the sectors and obviously the major indices. But my thought coming into today was, when I wake up in the morning, I do look at where futures are. I have Bloomberg Radio on, and it's just kind of hoping, like, please don't start the day up, 20 basis points to 50 basis points, a half a percent, because every time that we've been doing that, the market just kind of gets smacked on the open. We saw it yesterday, and we've seen a number of patterns of that taking place. So I thought it was just much better for the market to sell off coming into the open. It is what it is. It entices people to buy the dip, by the institutions, right? The institutions are the ones that are really controlling the market. Retail investors, it is what it is. We're a bunch of we're along for the ride for the most part, unless it's some small penny stocks type stuff. But for the most part, on average, we're along for the ride. It's what the institutions do. And when the market starts down like this, it does just give opportunities a little bit more to institutions to say, hey, enough is enough. Maybe I want to come in and buy something. So I think that's, an important point. And, it's an important step in the process. I think also, too, we talked about how, one of the major points that I've been stressing is that when you're going through these kind of life cycles of, a dip in the market to a correction in the market, there's a checklist that we usually go through, right? To see if we've been washed out enough for buyers to kind of come back, right? The market always cycles, right? We've had a number, last year, 2020, we had a number of really long, bullish cycles. Normally, it's not. Last year was unusual. Normally, they're not that long, and there's mixed in with trickier times. And that is definitely what we're seeing so far in 2021. But so just to kind of go back and reiterate what I was saying, there's checklists. I tend to look at things like the put-call ratio. I know a lot of people like to look at the CNN fear and greed model. And take a look at those components. Like, one of those components, I think, is actually the VIX that's in that model. But a lot of these sentiment indicators can work as a bit of a contrarian indicator to tell you when, hey, sentiment is really washed out, right? And when people are getting more bearish, it is what it is. That's when reversals can take place in the market. So we really didn't get to a that high of a reading in terms of the equity put call ratio. So if I bring up equity put call ratio, and I have a more detailed chart that I sent out to members earlier this morning that has the S&P on it. I guess I can do that really quick. I can bring that in here. But just to kind of start off with this analysis, but you could see this blue, and it's hard to see this blue line, so let me change it to, I don't know, yellow or something here. But finally, I think this morning we got to a little bit of a higher reading. So I've had discussions with people before about, hey, well, the put call ratio, it's really biased. Someone can come in and buy a whole bunch of puts for a penny and it skews the ratio. I understand there's some noise in it. But if you look at when this reading gets to, a 0.7, so on and so forth, right? So I want to move on to some other things here, but we just didn't get there at the end of the day yesterday. So I did hear that intraday that the put call ratio this morning was high. Now, I don't think it's going to close. I'm pretty sure it didn't close where it was this morning. We don't get these numbers out obviously until the SIBO puts them out around like 6 o'clock. You can go to the SIBO website. That's what I tweeted out last night. But maybe it was enough of that to get this market to turn a little bit. So as I said, and I sent out a member video earlier, and I'll kind of reiterate a couple things that I mentioned in there, but one day is not a trend. So even though we had some nice price action and a nice reversal, I think that, going forward this year, we've talked about a couple things, couple things that I've talked about in my videos is that you have to stay disciplined, right? And I think that overall, as a group, in terms of traders, investors, I think everybody kind of, forgot a little bit of discipline, including myself, in terms of how I normally trade. And, going back to last March, a year ago, the more disciplined you were to get out of things, the more that you missed that big, swoop down. And, some of the traders that ended up racking up really good years who traded the whole year, it's different if somebody came in the middle of the year and started. But if you traded in the beginning of the year and you locked in some of your gains last January, that was one thing I did last year. I took money out of my trading account because January got off to such a hot start last year. So that helped me. That was one of the things that you can kind of cheat with and say, hey, take some money out of your trading account. You can only invest so much, and you could always add it back. But, locking up some gains, helped me a little bit, in terms of last year. But I think overall, I've been talking about this a couple times this week about hopefully that you're taking away lessons from this price action that we've seen the last couple weeks, meaning being a much more disciplined trader. Really is I think, if you want to do this for either full-time, as a full-time gig, and I'll tell you, trading, I've been doing this now on my own, as a full-time trader and running a trading room for, I've been running the trading room for 5 years. So over that time frame, like, I've learned a lot of things too. Like, I've perfected my system, but we still sometimes when the market gets easy or easier as it did last year, and so many trades end up working, there's a lot of human nature that you're battling every day. And if you relax some of those things, really, that's where you can run into issues when the market starts moving against you. So it's a process. And again, I go over this in these videos versus a lot of chart setups. And I'll definitely go over some chart setups in the back end of this video. But I think overall, like, depending if you're a profitable trader or not, it's so much more than chart setups and about that's part of it, and figuring out where the trends are and so forth. But being super disciplined is a bigger piece of the pie than finding chart setups and finding those things. And it's one thing, again, when the market, when the wind is at the market's back, when breath is expanding, and it's an easier environment. But when it gets like this, like something that we've seen in March, more disciplined traders are going to come out of this cleaner. So that's the big takeaway, I think, is to review, what happened to you, and we'll go over a couple things. There's a lot of things to go over today, but we'll see if this put call ratio. I don't know if we really got to the extreme of where we needed to see a reversal. Again, if you just before I kind of get away from this point, but you could see a couple times, right? This was the end of October. Put call ratio got up to 0.77, and really, like, that was the bottom for the market then. So it just acts as, when this put call ratio gets really high, as good reversal points. So we'll see if we got that high, and it's not mandatory that you get a high equity put call ratio for a reversal, but it's kind of helps, So I'll leave that there. So interesting, we ended up. So what time did we do this reversal? Around 10:50, right? So we went. Once again, we kind of come into the session. Once again, I'll repeat. I'll get to the once again. The once again is what I'm referring to here. It seems like this happens a lot. First 10 minutes, we try to go up and we fail. So we took out the lows. We made a new low for the day in S&P, and then we had a nice reversal after 10:55. We had a little bit of a pushback around that 1 o'clock to 2 o'clock hour, and then we took off nicely at the end of the day. So that's the price action. Let me go over a couple things that I want to just stress in the charts. So number one, much different looking picture in the S&P. If you've been mostly, a diverse S&P or even just trading SPY, you fared so much better than some of the growth areas, the high growth areas of the market. So I put this poll in the room earlier regarding, what would you rather buy, right? So I think this diamond chart looks really good. I mean, what you want to see, like if you're a trend trader, which is what I am, I stick to trends. I look for uptrends. I look for buying into a pullback in an uptrend. So this, by definition, we've seen this a couple times where the Dow stocks push into the 50-day moving average, they bounce, push back into the 50-day moving average. That was in the beginning of the month. Notice that this last pushback, we made a higher low here, so that's bullish to me, right? And a nice turn, right back into this 20-day moving average. We didn't even get down to the 50-day moving average. Now, I don't have a crystal ball and don't know if we are going to get down there, but I would have to say that this is a pretty good looking bar for the Dow. Now, if you go over to the Qs and some other areas of the market, it's more of a work in progress. So I pose this question at the end of the day: which would you rather own? Would it be the Qs or would it be the diamonds? And it depends, I guess, on what type of trader you are. Like I said, I'm a trend trader, so I go with the diamonds. If you look through some of the stocks that are in the Dow, right? There's 30 stocks in the Dow. It's a kind of a flawed. I think I give you my opinions. It's a flawed index. It's price weighted, meaning the highest price gets the highest weighting in the Dow, which is different than the S&P, which is market cap weighted, and the Qs, which is also they're float adjusted market cap weighted indexes. But that said, right, if you go into the components and you look at some of how these things are looking, I mean, first of all, Home Depot is the third biggest weight. If you were in a Home Depot, you did pretty well this month. Goldman is another name that's pushed back. This one, to me, hasn't shown enough of a reversal. There is some news out about banks after the close. But UNH, that was a name that I traded yesterday. Still, if you're in these things, you're just faring better. Caterpillar, right, turned as well, on the top of value. What else is in here that I think is interesting? Boeing had a nice day today. I traded some Boeing today and yesterday too, but nice. We finally got this. I've talked about Boeing a few times in these videos over the last couple of weeks, and one of the things that I said is once we started to push back, I said either we're going to hold in here. If not, we're going to push down to the 20-day moving average. So we did get to push back to the 20-day moving average, which makes it a little bit difficult if you were trying to buy a little bit of the dip. But you got some nice confirmation, so you can use that 20-day moving average now as your stop because we're way above value for the month. So that's how I would kind of look to play that. There was some positive news. We did see a lot of calls go up the last couple days in Boeing, so perhaps that was the reason for it. So I would look for follow through. We only have one more day of the week, but your resistance is going to be up at around 254, right? And then we'll get a new value area for the week. So again, that's 1 hour bottom of value is short-term resistance, but I think it looks pretty good. Just to go through a few more charts in here. JP Morgan, again, went a little bit crazy on that Fed day. Now is pulled back a little bit, pulled back right into support, making the turn here. Right? I don't think Morgan Stanley's in the Dow, but I think Morgan Stanley, there were some calls that went up today too. It didn't get over these short-term moving averages, but it did find some nice support here. And perhaps tomorrow, because I do see this up on this news, that will clinch it to kind of get it over those two short-term moving averages that I have on my charts, which are the 20 and the 5-period exponential moving averages that I have on my charts. So just to continue with this exercise, Disney, they're not all going to look the same. Disney had a little bit more of a rough go of it, couldn't hold in here, but next line of support, bottom of value, it seems to be holding. It did get back over the 50-day moving average. I would probably use that if you're looking at trading Disney. What else? Procter and Gamble. This name has been acting very well as the consumer staples. Right, so Procter and Gamble, you're not extended here, right? And to me, this is an easier trade, right? We took out this virgin point of control and have been holding above it. You could use the 200-day moving average, and here's what the XLP looks like, which I've been long, right? I went long some calls a couple days ago in the consumer staples. So again, not exciting, but it's not. It's very difficult to get excited, and I don't think you can, about going long consumer staples. But sometimes you just have to cover up the symbol and say, hey, there's something interesting going on here in the chart. Right? It's not my favorite group of stocks. I would rather be trading software names or growth names, but we can't force that issue. Right, and I know everybody keeps looking at the growth names. Me too. Looking for some confirmation and so forth. But I think for now, and I think it's going to take some time for those growth names to work. To work themselves. Find bases, find support. It's a process for that for names that went up so much last year and they're now coming back down. So. My thought on the growth names at this point is if you want to buy the dip in some of these things, think about your time frame, right? And again, I'm not giving any advice here, but if you're a long-term investor, buying the dip usually works over the long term, usually, right? Again, I'm not making any major conclusions here, but the market does go up over time. It goes all over the place, in the intermediate term. But if you're a long-term investor, then buying the dip in some of these things, it often ends up working out. But if you're more of an active trader, it takes time for these things to straighten out. Again, long-term investor, you're talking about years, right? I'm not talking about a couple months. So when I say long-term, I'm talking about a couple years, right? All right, and that's the story with Cathie Wood, right? And ARK Investments, right? Everybody looking to like day trade the stuff that, when they make a new purchase and so forth. It takes a long time, right? For some of those names that she's buying, it may work out in the end in a couple years. It may work out sooner than that, but their time frame is much more than what people are using that file for. So I've mentioned this till I'm blue in the face over the last couple months. But, we talked about how, for example, this Unity software, people were going nuts when Cathie Wood was buying the dip over here. Oh, yeah, it looks great. Look at it. It hasn't done. So, again, if you could. So I want to get away from this a little bit because I'm not putting anybody down. I'm just saying that you have to think independently and have your own system. Because if you're just blindly following things like that and you don't have a 5-year time horizon, this has cost you a lot of pain. And the same thing with a Teladoc, the same thing with a Zillow. You have to have the right time frame. And if you're putting these in your own independent system, maybe it's not the most sexiest group, the Dow Stocks, but money is money, right? And that's the thing, as traders, that's what it's all about, is making money in a nice disciplined format with a trading plan process. But that's the end goal for most traders. That's my goal, right? Is to be making money. And so again, I encourage everybody to think independently. I know there's over the last few years there's been such an emphasis on following institutional option flow and following this fund and that fund when they purchase things. But I'll tell you, the more that you can get out of that mindset and think independently and have your own trading plan, you could use all of those things as trade ideas, option flow. I'm watching what the hedge funds purchase and so forth. those are trade ideas. Those are not things, in my opinion, that are just, that should be straight up copied. Because again, they have a completely different set of parameters that you do. So anyway, I'll move away from that. But it's an important process when it's important when you look at what stocks are doing very well versus what everybody seems to be wanting things to do well, right? Tesla, it's not there yet, right? We've talked about the 720 level back in here. It could not make it over 720, so it's not there yet. Hopefully it does make a higher low here. And then we'll kind of go from there and see where it is. But for me, like I've got to see this thing probably get, we're going to have a new value area, which is still developing, but that 720 level is going to come up again, right? Because, you don't want to be put on a trade here and then it get, well, I guess unless this is still 60, 70 points away, so you could make some money on it. But I just think it's kind of in no man's land, right? And again, long term, you want to buy some Tesla in your long IRA? Probably not a bad idea if you have a long time horizon. So it's very important that you think about things in that context. Okay, so what crazy blockchain. So by the way, the VIX was down. The VIX finished under 20 again today. People have asked me. There's been some comments. I don't understand why the VIX isn't higher. Well. Think about what the VIX measures. The VIX measures short-term implied volatility in the S&P, not the Qs, not in growth stocks. That's not what the VIX does. You have to understand, like if you're going to use the VIX in that context, understand what it measures, right? It is not a qualitative fear index, right? It's quantitative. It measures specific things, options in short term S&P, right? That's all it is. There's no emotion behind that. Well, maybe I guess you could dig into it and say that there's some emotion, but if you look at this S&P chart, don't you think that the VIX? Do you think that the VIX should be up at 30? Looking at this chart, I don't think so. It's not volatile. It's not that volatile, and I hope it doesn't get back below the 50-day moving average. And by the way, this is that. So, all right. So we went over some Dow stocks. I'll go over some of my trades. Did I cover everything that I wanted to here? But again, you could see a lot of names really rallying from the lows. Retail. I wanted to go over just a couple sectors too. So where I see strength is in industrials. Right. Nice catch of the 20. So we went over some individual names. I just want to I covered staples already, the financials, right? Finding support where they needed to. The materials also finding support, uptrend. Consumer discretionary, not so much, but if you look at the RCD, which is equally weighted, it looks a little bit better. Unfortunately, Amazon and Tesla are a drag on consumer discretionary, right? So this ETF, I've talked about this before, but it's equally weighted consumer discretionary. The difference between this and XLY is the weighting scheme, right? So Amazon and Tesla are 37% of this ETF. So as they're underperforming, they're pulling down the whole ETF, right? And look at the difference. Here's XLY. Here's RCD. Most of the same stocks in there, just weighted differently. Amazing, isn't that? All right. What else? And the home builders. Look at that candle on the ITB. One of our moderators at Tribeca Trade Group mentioned early on, like Lennar and DHI were really strong. You'll find that, by the way, before the overall market started to turn around, we started to see this strength in the home builders. It was like, hey, something's going on. Something looks pretty good. Here's DR Horton. Very, very nice looking candles. All right, so we're covering a lot in this video. I know it's a long video, so let me talk about my trades. Here's what I did. I gave a shot at a couple things, and I didn't want to load up on positions today. You know, you have to be careful because, like I said in the beginning of the video, one day is not a trend. I like this TRV. It looked pretty good. So I added some to this. I took a target. MHK, Mohawk Industries, coming out of this consolidation, really nice. Let me give a hat tip to Joe Kunkel. Mentioned this on Twitter, and so I didn't give him any props on Twitter. So in this video, but I saw him mention it. I took a look at the chart, and I took some of this trade. I tried Taiwan Semi today. There was some, I think, June calls. I'm not sure if they increased open interest, but it just looked too. It was too challenging, and there's better opportunities out there. So, I'll revisit this, right? But it could not get outside of value for the day, right? I thought it maybe had a chance, to get up here and go up to 115, but it did not get out of value for the day and spent the whole day inside value. So I'm glad I abandoned it and went on to something else. Again, whenever that happens, I always set an alert back on the stock because I could get back if it ends up doing what I wanted it to do in the first place. I want to make sure I catch it. Boeing was nice. I played the headline. I tweeted that out. I'm always late with whenever I tweet something out that's moving like that, it's always going to be delayed because I put it in the room first and then I put it on Twitter. I even traded, I had a keep it simple trade. I traded a little bit of SPYs, made a little bit of money, base hits. FCX I abandoned too. Again, I just didn't want to load up with positions. It looks like this thing closed around the highs, but I unwound some in here. But I just thought that was a good risk to return setup, something that I'll revisit because there was an awful lot of calls that went up. But again, a little bit more of a challenging chart. I don't like when things break the 50-day moving average. I think that they can bounce, but I don't like when things go down too far. Right? And and then I did put on the diamond trade. Every once in a while, I'm going to take a small shot on a growth name. But when I do that, when I'm going to take a shot on something, it's going to be a small shot. Right? It's just not going to be a big position. So, that's the way I'm approaching growth is, considering some of these things I think are just going to take some time. If I want to give it a shot, it's going to be a small shot and it's going to be something like a call spread, right? Where I can only lose the premium. It's not going to be as expensive as going outright calls, right? So again, I'm really making sure that if I put on a short-term play like that, I'm okay with losing the premium. It's the worst I could do. All right, guys, that's it for today's video. Again, a lot of constructive charts out there, things that have held up really well and are resuming their uptrend. And I would say, I would encourage people to say, look at things objectively and what charts look constructive versus what charts look like they're a work in progress. All right, guys. Thanks very much for watching. Have a great night, and I'll see you tomorrow.